And amongst all of the earnings reports today, we are watching shares of Tesla. Right now, they're up about 2.4%. The company did post an unexpected profit during the quarter of $1.24. Analysts were predicting a loss, revenue nearing $6 billion, which was a beat of estimates as well. And gross margin, automotive gross margin improved at the company to 25.5%. Free cash flow, however, is still negative, which our next guest is going to talk more about. But also equally getting as much attention as the numbers themselves was Elon Musk and his commentary on the conference call. Listen to what he had to say.
The extension of the shelter in place, or frankly, I would call it forcibly imprisoning people in their homes against all their constitutional rights, that's my opinion, and breaking people's freedoms in ways that are horrible and wrong, and not why people came to America or built this country.
He threw around the word fascism as well when he talked about what's been going on. And he said Tesla will make it through this, but a lot of small businesses will not. To talk more about those comments, as well as the numbers, we're joined by Gordon Johnson. He is GLJ Research founder and CEO. Gordon, it's good to see you. Hope you're well. I do want to ask you first about those comments, right? Because we had sort of a more quiet period coming from Elon Musk where he was, for lack of a better phrase, behaving himself, right? And then to come out and say something like this, I mean, is it relevant to investors when he makes this kind of comment?
We think it is. And we think what's important is if you think about what happened in China, right? They were welding people into their homes, forcing people to stay into their houses. And he never came out and talked bad about that. In fact, on the call yesterday, he talked about how great China's infrastructure is, yet he calls essentially a lot of government officials, potentially in California and federally, fascists. I think the issue is every day we calculate that Fremont is closed. He's burning about $300 million. We think that contributed to the almost $900 billion free cash flow burn in Q1, and we think it's going to contribute even more to Q2. But more importantly, a lot of the euphoria around Tesla is the impenetrable armor of Elon Musk. And with him calling the stay-at-home orders fascist and saying open up so you can get people back into the factory to make cars, I think it's going to rub a lot of people the wrong way. So it could start to erode on his image.
Gordon, it's Adam. Good to see you. What kind of demand is there going to be for Tesla products? Not necessarily electric cars in general, but Tesla after we get past COVID-19?
Great question. So Tesla currently valued at about $130 billion in market cap. They sold 367,000 cars last year. VW valued at about $60 billion. They sold 10.5 million cars last year. So Tesla needs to see tremendous growth in its sales. In the first quarter, if you look over the past 12 quarters, it was only the sixth largest amount of revenues they've done. If you look at their market share in Europe, it fell from 37% in Q4 to just 25% in Q1. And they've already cut prices for their made-in-China car by 16% year to date. Point is, we've always said Tesla has a demand problem. You have a ton of new EVs hitting the market this year. We think Q2 is going to be a disaster, roughly $2.4 billion in cash flow burn. And we think this V-shape that people are expecting in the second half is not going to happen for Tesla. We think they're going to do about 311,000 cars in deliveries this year. We think it's going to be a big disappointment. So demand is a problem.
Hey, Gordon, this is Dan Halley. I just have two kind of questions. What do you expect will happen to Tesla with oil prices being so low? People may not see the incentive to going into an electric car. And then I guess as far as Tesla's valuation goes, yes, they produce a smaller amount of cars than those big name companies, but they also do have the lock on the technology and pushing forward that as well as the battery storage, power storage over time. So I guess, doesn't that make up for the pricing?
Great question. So with respect to valuation, think about this. In Q4 to Q1, Tesla's operating expenses fell. They were down quarter over quarter. Yet in Q4, they were operating one multi-billion-dollar plant. In Q1, they're operating two. We have no idea how your GAAP OpEx can fall when you have two plants operating versus one. Point number one. Point number two, with respect to valuation. Listen, I'll be the first to admit, this stock is not trading on reality right now. This is, in our view, this is our opinion, a penny stock that you get these pumps on Twitter that unfortunately for us has a $130 billion market cap. Here's the problem, though. If you look at their 10Q that was released shortly after their earnings last night, You know, they, in addition to the 2.6 billion or 2.3 billion, 2.4 billion in equity they raised, they maxed out their revolver to about 700 million. So even with all that, you had cash down nearly 2 billion quarter over quarter. And with respect to the technology, they do not have any special sauce. This is a viewpoint held by many reflected in Tesla's valuation. But anybody, they're effectively buying their batteries in China from a Chinese producer that anybody else can buy from. There is no secret sauce. And when you look at the real world ranges of Tesla's cars versus what they say, and the total range, they fall short of what people are saying with respect to the overall range. So we think that a lot of the perception is incorrect. And that's why we think looking at free cash flow. You can do a lot of things with your income statement. You can't fake free cash flow. Down nearly $900 million in what should have been a great quarter for Tesla. Keep in mind, COVID didn't happen until late March, and they didn't shut their facilities down until March 19th after Governor Newsom ordered the shutdown. So keep in mind that last week they were pushing to deliver cars. So we think Tesla has a demand problem. We think they have a cash flow problem. And as that cash flow burns through this year, we think people are going to focus back on the fundamentals, and they're ugly.
And Gordon, just thinking about the Muskian regime, if you will, or the paradigm, it's been interesting to see a lot of CEOs, whether it's the Bezoses and the Igers and even the Zuckerbergs of the world, coming out and kind of taking more proactive, hands-on approaches. Of course, Elon Musk is notorious for being hands-on all the time, sleeping under his desk, kind of being at the manufacturing plants all the time, micromanaging. But if you think about the overall vision, we saw all that splash with Cybertrucks. We saw a lot of his moonshot ideas kind of being crushed to a certain extent. How do you anticipate the business model and the pipeline amid this pandemic and post-pandemic? Do you think Elon Musk will be able to kind of operate in the same way that he did 6 months ago? And to your point, with a lot of the cheerleaders rallying around him to the same degree?
Yeah, so, keep in mind, Elon Musk in 2017 promised a Tesla Semi, Class 8 Tesla Semi. The deposits on that were anywhere from $20,000 per truck to $200,000 for the Founders Edition. That got pushed out again now to 2021. We're talking about nearly 4 years that people expected they were going to get this truck that they haven't. They pushed out the FSD, the full self-drive, the robo-taxis to 2021. Keep in mind, last year in 2019, they raised $2.3 billion on the promise of having 1 million robo-taxis on the road by the end of this year. Elon Musk said those Tesla cars were appreciating assets. They raised $2.3 billion on that promise. They've now pushed that out to 2021. We don't think it ever happens. So with respect to the business model, the question is he going to continue to be able to generate billions of dollars of equity raises for products that, quite frankly, right now, we believe, our opinion, are vaporware. They don't exist, even with full self-drive. That is factually incorrect. There is no such thing as full self-drive. You have to be level 5 autonomy. They're not there yet. So will he continue to be able to raise cash while he's raise money from the capital markets while he's burning, hundreds of millions of dollars per quarter perpetually? We think the answer is no, but yet to be seen. And we think as the professional investors see the continued cash burn, as they see Tesla losing share in Europe, the US, and as they see price declines in China, we think the optimism and the euphoria around Elon Musk is going to decline. No doubt, he's done a good thing for EVs, and we think the future is EVs. But if you look at the biggest 10 car companies, they all have anywhere from 20 to 10 EV cars planned through 2022, new EV cars. Tesla has just one. So they've had a monopoly on the market. That ends, and it ends this year. And you're already seeing it with the market share shifts in the US and Europe. Significant market share shifts that Tesla's losing to guys like VW and Renault.
Gordon, I got to ask you what I usually ask you when you come on to talk about Tesla, which is, when are you going to be right? I mean, in other words, like, even if you're right on the fundamentals, even if you're right on the trajectory, doesn't matter if people keep buying the stock, which is what has continued to happen. I mean, you've been shouting this from the rooftops for a while now, right? Your case on Tesla. And yes, the stock has taken some occasional hits, but in general, it's done pretty darn well.
Right. I mean, at the end of the day, if your business doesn't generate cash, at some point, you're not going to be able to cover your liabilities. Again, they have an entire Chinese facility that is effectively not reflected at all in their financials. Their OPEX was down quarter over quarter. So the question is, when are we right? I think the answer to that question is when Tesla can't tap the capital markets to basically underwrite its loss-making car business. And, people are guiding to what they're going to do in the second half and in 2021. Listen, Tesla hasn't had real competition essentially until this year. A number of different large, long-standing car makers making EVs. And in addition to that, they haven't had competition until this year. They've always had an ace up their sleeve. Last year, it was the Model 3 introduction into the international markets. The year before that, it was the Model 3 introduction into the US. Year before that, the S and the X. What do they have now? They have the Model Y, and it's not selling well because it's 75% made with the same parts as the Model 3. They only have one new EV planned by 2022. So you don't have that ace up the sleeve that's going to make their cash flow look better. So as this burn accelerates and you see real competition in the EV space, we think the dynamic and the euphoria around Tesla is going to change significantly.
Well, Gordon, we'll stay in touch. We'll check back in with you as the year does go on. In the meantime, all the best to you. Thanks for joining. It's good to see you.
Good to see you, Julie. Take care.
Gordon Johnson is GLJ Research founder and CEO.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.